We are live. Welcome, welcome, welcome. Hey, this is our first time going live, gentlemen. Let's give ourselves a round of applause.
Hold up. Thank you for the pat on
Pat on the back.
the back.
I'm gonna
Appreciate
go
that.
live on IG, and we're just gonna have a conversation because I think and you guys asked me a few times, what are we talking about tonight? And I think the thing that we're talking about and what needs to be heard is that there are different ways to get the capital that you need in your business, but we're not talking about all those different ways. We're only talking about the most common ways that we know about it. So we're going to go over a few of those things tonight. But first, I want to introduce you guys to my partners, Sean and Kyle, and I'm going to let them do their own intro. And so, Kyle, take it away. Tell us a little bit about yourself. Give us your Campbell soup version of your intro.
All right, Campbell's right. I'm Kyle, the Chief Freeman. So as you can see by my hat, but 24 years in the military, retired. But basically, ran businesses with my partner Sean over there. Got a chance to in the I want to say with the early 2000s, took it public. Then after that, basically ended up writing a book about it. People used to ask me a lot, how we did this, and so basically ended up creating a company to teach people how we did it. So that's really like a Campbell's soup version of how we got to this part right here, and got a chance to meet Tyrus and realized that was a match made in heaven.
I love it. Sean, go for it.
Yeah, again, my name is Sean. My name is Sean Timor. I did military. I was in the military, United States Air Force, best fighting force in the world. Had a chance to, my career started out early. Started out when, right after the military, I had a chance to learn, venture capital. I mean, I learned everything from how to raise capital to how to take companies public. So we helped out a lot of companies back then. I went on and got licensed, worked for some of the largest broker dealers in the United States. Again, like my partner said, 2003 we came together, and we we built our company basically from nothing, and we took it public, and was one of the only minority public traded companies in the United States. There was roughly around 14 of us. We was one of them. And we do an academy on Wednesday and we teach companies how to raise capital for themselves and how to take their own companies public. So that's a little bit of what I do. Again, my name is Sean Timor. Thank you.
I love it. So what's going to be interesting, and as you tap in, and listeners out there, as you tap in, we need to have a conversation around capital because we know that without capital, businesses fail. And I want to say, go on the record to say, most of us don't even realize the potential for ourselves, our people, to raise capital and take companies public. It's We hear about IPOs, we hear about going public, we hear about trading in the stock market. We may even buy stocks, but we don't know how to necessarily do that for our own business. Most of us are still operating as operators in the business. We don't even, our goal is to hit six figures. And then when you hit six figures, the goal is to hit seven. But we don't think about there is $1 billion opportunity for your business, for your idea. And what you've been told is, okay, if you need money in your business and you're just starting, well, maybe you should bootstrap. Maybe you should go and take your hard earned paycheck, invest it in the business and grow it like that and grow it slow. The issue with that is there's only so much you can bootstrap. There's only so much money that you can put into your business unless you were born a multimillionaire. And I'm gonna go back to that in a second because even multimillionaires don't put their own money in their businesses. Elon Musk is out here raising billions of dollars and he has billions of dollars. So think about that for a second.
Mm-hmm.
Number two, then they tell us after you've bootstrapped enough, go get loans, go to a bank. All of these events that I go to, chamber meetings I go to, conferences I go to, they always have a preferred lender there, a banker there, because they want you to come get a loan from them that you got to pay back the interest or go to the SBA and get an SBA backed loan.
Right.
Nobody talks to us about going out and finding investors and raising capital and using either venture capital firms if you're new, or if you have an established business, you may go after a private equity company who's willing to invest capital into you. And so, Kyle, I know you guys been around a long time. You came up in venture capital. This is what you do.
Mm-hmm.
Why do you feel like we don't have this message and we just don't even have a understanding of this possibility of getting money for our businesses?
Well, I know, we backdoored our way into the business. So, we got taught by folks that probably, we wouldn't associate with on a daily basis, but we backdoored our way in there. Matter of fact, Sean's brother is the one that brought me into it. And that was how we got there. And to be honest with you, it wasn't too many of us there. When I say us, you know what I mean? So, you had to perform to be able to stay there. And if you couldn't perform, you didn't. But it's a tight knit community, and I believe that most people don't understand how we can use venture capital, and most people think that you got to go get your Series 7. You got to be a broker dealer, or a stockbroker to be able to do this. So to get that license and to take that test, I really believe that's probably the reason why so many people steer away from it, because that Series 7 is a beast to be able to learn and take it. And most of the time people that are doing it, they're, college graduates or master's degree or whatever, or, business financing, that's what they're in. And if you're not in that arena, then you probably are not going to go towards this market.
Very interesting. Very interesting. And so walk me through, and Sean or Kyle, either one of you guys can do this. Walk me through the process, just a short, low numbers, easy math of how I, as a new business owner, can utilize venture capital to get the funds I need in my business and what I can use them for.
Right. So let's say for example, you're looking at building a boutique hotel, right? Luxurious boutique hotel, prime location, prime real estate, right? So what a lot of people will try to do is they'll try to go get bank finance for that, right? And what happens is a lot of times the bank is going to want collateral. So they're going to say, put up your house, put up something, put up, your stocks, your bonds, or whatever, in order to get this capital, right? But when you raise capital and you have a boutique, when you raise capital on a boutique hotel, basically what you want to do is you want to allocate a certain percentage of your company. For example, a lot of times what people they don't understand is you're not giving up the whole pie of your company. So for example, if you have 100% of your company, and if you give up 20% of your company, something like that, and raise capital based off of that 20%, based on that idea, and you can raise your millions of dollars based on that. And then that way, what happens is you'll have, yes, you're sold 20% of your company, but you have the money, the capital for the hotel. So it's real easy. But what a lot of people, and just to kind of add on to what Cal was saying, a lot of people don't do it because they think that their company is going to get taken over. That's one of the most common, basically excuses that we hear about why people don't raise capital. I don't want to lose my company. You're so far from that, because
Right.
if you're only giving up 20% of your company and you own 100%, it's hard for that 20% to capture that 100%, to take over that 100%, right? So, but that's basically it. You'll do something like a PPM, put together a private placement memorandum. Let's say you do for a hotel, assuming it's over, 3, 4, 5 million, you might do a 504. 504 can
Right.
506. 506 goes up to it's an unlimited raise, and you're able to advertise on 506C. And so you might do something like that, and you just you find investors. You can go to family offices. You can use for example, call rooms across the United States. Call rooms are people who call investors, broker dealers, and there's many different ways to find those investors. So you give up, 10%, 20% of your company and raise the capital off of that.
I love it. And let me help the people a little bit because Sean went and dropped some technical terms on us that we might not be familiar with just yet. When you are talking about a private placement memorandum or one of the regulations, these are, and Kyle loves to talk about the Jobs Act. So I'm gonna let him jump into that right after I say this.
Right.
They're financial instruments because we want to do this legally. We ain't talking about just going out and asking people for money. When you're raising hundreds of thousands and millions of dollars, you need a legal financial instrument in order to do so. And so those are your 504s, your 506s, and those regulations that allow you to go out and raise capital. And with each regulation, there's specific things, whether it's accredited or unaccredited, whether it is you can do advertising on public media, social media, newspaper, print, mail. It depends on the regulation that you have. And so if you think about crowdfunding, Kickstarter, GoFundMe, those are built on regulations. That's why they are able to collect that money from different people online the way they do. And so, Kyle, jump in really quick. Tell us about the Jobs Act and the significance of that act that before I met you guys, I heard it, but didn't even know what it meant. It meant making jobs available for more people, but really break down what the Jobs Act did for us and how it can help us get the capital we need in our businesses.
Right. So in 2012, President Obama created the Jobs Act. And so a lot of times, so it's JOBS. So I know a bunch of you say, oh man, they created the fact that we can now have employment or whatever. That's not what it means. So it was disguised in a way. And unfortunately, a lot of people miss it because JOBS stands for Jumpstart Our Business Startups. Let me say that again. Jumpstart Our Business Startups. So what does that mean? That means basically you now have instruments that can help you with this. And that's like, Tyra said, Kickstarter, GoFundMe, those crowdfunding platforms, they were invented because of the Jobs Act. And so when that happens, now you literally can raise funds to get your business going. But a lot of people don't realize that. And they just think it was for instance, Obamacare or whatever to get healthcare. But the Jobs Act, that's what it was really created for, to help you jumpstart your business.
Yeah, I love it. What I find here interested in this conversation, number one, it's a conversation that most people I know in business don't ever have. The private equity world, venture capital, fundraising, capital raising is elusive to us. It seems like it's something that we hear and we see in the movies, but we can't touch it. And with me sitting here with you guys and meeting you and getting to know you and understanding that you actually took a company public. Today, there's only 8 minority publicly traded companies on the stock market. 8 out of the thousands that are there. Only 8.
Yeah.
And you guys were one of them. And like you said, back when you went public, it was 14. So we've reduced from then. When I look at a Robert Smith, he is one big name in private equity. But we hear, or we don't hear about a lot of other people. What we have been, and I'm going to step on toes and I don't care. Every time I see our social media influencers talk about wealth and building wealth, it's selling a product or a course or something that can try to get you rich quick. But when you need capital, they send you back to the bank, or they tell you that you need to work harder and sell harder,
right,
or you need to, again, bootstrap. Nobody's leading us to the world that all the major companies use to raise capital. Uber raised capital, Netflix raised capital, Microsoft raised capital. All of these companies raise capital, and they've shown us the blueprint. And so I love for this conversation to be the boring one, because that's what people are going to call it. They don't see us in the planes. They don't see us in the cars. They don't see the jewelry.
right.
But they don't understand that this world is a world where you can create. And let's talk about this, because let me bring Jersey Mike's in. Jersey Mike Subs.
Right.
Instant billionaire.
Instant.
Now, here's the dynamic, and here's your choice. You can work in a 9 to 5, or you can run your own business for 30 years and then retire. And you might get they don't even do pensions no more. You'll
Right.
have a 401k
Right.
and Social Security, and
Right.
you might eke by. You can run
Barely.
your own, barely.
Right.
You can run your own business. And we know that only 30% of small businesses survive after 10 years. And out of those that survive, less than 1% actually make 7 figures. So now you can run a small business for 30 years and retire and have no money. Or you can be like Jersey Mike's, run that business for 50 years, raise capital, expand, and get bought out by a company like Blackstone for $9 billion. Now his retirement gonna look a whole lot different than the retirement of the other two examples.
That's
Yeah.
exactly right.
And it's right in front of us.
Yeah.
It's right in front of us. And I'm seeing it every day now where, and I love Earn Your Leisure. I love watching Earn Your Leisure. And I see their posts, and they're consistently posting, this person's raising capital, this company's raising capital, this organization's raising capital. But what I notice about those posts is none of the people I know that are in business are in those posts or talking about those posts. And we spend a lot of time talking about investing in the stock market, buying somebody else's stock in their company, but
Right.
we don't talk about going public ourselves, taking our company public so people can buy our stock. And
Right.
so either one of you can jump in on that. Why do you feel outside of education, maybe it is just education and knowledge that is possible, why aren't we trying to go public more often with our own businesses?
Right. So I think if you look at it like this, right, it's not a lot of people like Cal and I out here that do what we do, first of all. Second, the people out here that's doing what we're doing, a lot of times they have qualification. They set up qualifications for companies. So you might have to have, I think the one company they had to have what was it, $500 million in revenues in order to go public, even think about going public. You got to pay at least, 750,000 was the least expensive that I saw in order to go public. Plus, you had to have the revenues. I mean, I've been told that, people coming up to me to seminars and they say, well, I tried to go public and they wanted, you know, $10 million a month and $750,000 down and all of these other qualifications. So it's not, and I'm not saying it's zero, but it's not many people that on this that do what Cal and I do on this level, right? So a lot of times this information is kept from the business owners that's doing $1 million or 500,000 or 300, 400,000. It's kept from it, right? It's almost like hidden in secrecy, right? But the truth of the matter is, can a 300, 500 $1 million big bill?
Right. And Sean
It
said,
can.
right. Sean, you
Of
said
course
10
it
million
can.
a month.
There's smaller exchanges that is not like the Nasdaq or the New York, but you can go public on those exchanges as well, and they're less stringent,
Right.
right?
And
So,
Sean, you said 10 million a
but
month.
there's opportunity for any company out there.
Yeah. You had said 10 million a month. You meant about 10,000 a month. I was trying to make sure you made the statement, but it's not 10 million. It was like about 10,000 a month. But one of the things that I would say on top of that is that how many people seen The Wolf of Wall Street? How many people seen Boiler Room? How many people seen Margin Call? Those flicks. How many people in those movies look like us? That's a major statement right there about those movies. Because, like I said, most of the time we're not in that playing field. We're not there. So when you hear about it takes money to make money, this is the real platform where it takes money to make money. So if you want to grow your money, most of the time we're talking to people and they say, well, why do I got to put money up to make money? And for us, a lot of times it doesn't make sense. But guess what? You have to. And I remember a story about Jeff Bezos. When Jeff Bezos went to his family, when he was getting started with, with everybody knows Jeff Bezos is Amazon, right? And he borrowed $250,000. He told his family. Now think about it. How many of us can go to our family and get $250,000? And then he had to have a conversation with him. I might lose all your money. So how many of us can have that kind of conversation and then tell them that we might lose their money? Now, fortunately for his family, it worked out. But think about it. We're not in positions like that. So I believe that is a major stickler, for one of the reasons why a lot of times we're not familiar with this and why we're not introduced to this. And like I tell you, Sean and I, we got backdoored in. So when we got in, we had access to something that we had never seen before. And now what we were able to do is utilize that. And again, Sean and I, we were venture capitalists before we became business owners. Let me say that again. We were venture capitalists before we became business owners. So a lot of people that start up their business, most of the time, what do? They start their business up because they either are working someplace and they don't like it. They've got another idea better than who they're working with, or they think that they can do it better. So how do they get started? Bootstrapping. And they don't even understand. So by the time you get to the point where you want to grow your business or scale it, they don't understand that, you need more money. So what do? They go the only route they know, path of least resistance, is the bank.
And I don't even know if that's the path of least resistance, because when you go to the bank, they're going to ask you for your current bank records, last 3 months. They want to see what you got. They're going to look at your credit, because if your business is newer, you don't have business credit. So they're going back to your personal credit. They're going to make sure that if they lend you money, you have enough, what do they call it? Solvency in your bank account to be able to cover. And so there's a lot of barriers, and most businesses can't even get a business loan. Even if they go to I want to say it's a community development, CDFI, one of these side banks that they've put together to lend to people who can't get traditional bank financing, it's still difficult to get money from them. And so I'm speaking to the audience, and I want you guys to follow us. What we're going to do is every week we're going to come on Thursday, 7 p.m. Eastern, live. Not next week because Thanksgiving, but every Thursday after that, we're going to be here because we want to share the information and we want to answer the questions that you have on how do I raise capital? How do I take my business truly to the next level? Because all the things that you're told on social media that you need to do, yes, you need to run digital marketing and paid ads. Yes, you got to do email marketing. Yes, you got to build a team. Yes, you got to train the team. Yes, you got to offer more products and services and do all of that. But in order to do each one of those, you need money. There's no other way around it.
Mm-hmm.
So many people come to me to help them scale their business, and then they don't have the capital to even run 6 months. And it's like, oh, I need to make money in 30 days because so I can pay for this. I'm learning now that when that person comes to the door, they're not ready. They're not mentally ready. They're not prepared, because if you can only go for 30 days or less and you got to make money immediately or you can't continue, you're in the wrong playing field. And so Sean, you gave out all the little goodies of where they could get investors from. You mentioned family offices. Half the people out there don't know what that means because I didn't know. I had to go Google it. For those of you who don't know, a family office are basically they're family businesses or they're entities or groups that have been created to manage a family's wealth. And so when a family reaches about 125 million in net worth, Rockefeller family, Walmart family, whatever family name you want to call, they get special attention. They don't go to a financial advisor like the rest of us. They get that stuff brought in house, and then that family office manages their investments. And so you can reach out to that person who's managing their portfolio, so to speak, and raise capital from them. And you can go to other venture capital firms, angel investors, private investors who have capital, and you just got to find them. And like Sean said, we have a call center that calls accredited investors all day long to pitch products, pitch businesses where you can raise capital. And so I'm learning that I wouldn't even say, I actually think it might be the easiest way. It takes a little bit of mindset shift, but it is really the easier way to raise capital in order to get to where you want to go. You want to build a new software, you got to have money for that. Raise the capital. You want to sell merch or shirts. I think another thing, and I want you guys to tell me how you feel about it. I know you have said certain things in the past, and we don't put Shark Tank down. I like Shark Tank. I think Shark Tank gave us a vision, a look into that world a little bit.
Mhm.
But everybody can't get on Shark Tank. And tell us why Shark Tank might not be the way you want to go.
Yeah, a lot of times what happens is when these business owners go on Shark Tank, what happens is they may, first of all, they don't give them accurate valuations, right? So they always lowball their valuations so they can give them less money for a higher percentage of the company. So, for example, you'll see somebody go on Shark Tank, they'll give them $200,000 for 40% of their company. Well, if you do 40% of your company and you have a president, vice president, and a CFO, somebody is getting under 40%. So basically, the shark, right, with 40% has more equity than your executive team, which is, that's pretty much a no-no right there. You don't want. That's how people lose their companies potentially. For example, if somebody has 40% of your company, and let's say you raise other capital, so now your company is going to be diluted as far as your equity in your company. And let's say you go public, you have 10% out there. If those sharks purchase that 10%, they own 50% of your company. Does that make sense? So now you're basically somebody, pretty much your whole executive team, besides, your whole executive team is under the shark. And that's how you can get your company taken over. So you got to be real smart and on how to do this thing right. You got to work with some very knowledgeable professionals.
John keep getting them phone calls. That's what that is. It be taking them out, Kyle.
I don't know what's wrong. My phone keeps going on. But you got to work for some very knowledgeable professionals in order for that to not happen to you. But can I touch on something real quick, Tyrus?
Yep.
Real quick. I think what a lot of people, you'll hear, Tyrus, right, and Kyle, and you kind of have to look at it like this. You'll see a lot of people, I'm invested in Google today, right? Or I'm invested in Amazon. Why would you, and it's kind of crazy to me, because why not invest in your own company? Why not have your own stock with your own company and have people invest in you? So instead of everybody going and investing in Amazon and Google and all that, why not invest in XYZ company, your own company? Now, how do you benefit off of that? You personally benefit off of it is because you have shares in your own company. You are the majority shareholder. So, for example, you have, let's say, 1 billion shares authorized. You have, I don't know, let's say 50 million shares that's your shares, right? You have 50 million. Somebody invests, let's say your stock price goes to $5. Do the math. We're talking about just $5. But if you put together a very good product and your stock goes to, $10, $20, $30 or $50, now, you're up there, we're talking billions of dollars, right? So let's stop thinking about how to invest in Amazon and all these other companies and take your own company public so people can invest in you. That's how you create the generational wealth. Yeah. They don't talk about this stuff. They talk about, getting all of this land, and there's nothing wrong with it, but this is truly how you create generational wealth.
Right. Yeah, it's just the American dream, and I'll take it, one step further than what Sean is saying because I can't tell you how many times I've come across people with great ideas. I mean, I'm gonna give you two quick examples. And this was in San Diego. This is where we went public and what we did. So people wanted to meet, me and Sean because we took a company public. I met a guy had a phenomenal idea called Saucy's Pizza. All right. And I remember going into his place and his pizza was outstanding. Matter of fact, he had a pizza, you take it, you put it on this tray or whatever. And when you put it on the tray, because make the pizza for you, but this tray, you stick it in the oven, and then the oven heated up that tray and cooked the pizza. And the pizza was outstanding. So this is what it was. It was called Saucy's Pizza. So I'm like, okay. And he had bought into this. This guy worked at a company in San Diego, and he took his 401k money to open up his own little thing. Now I'm sitting up there watching, and I'm saying to myself, I don't know if you guys know San Diego, but even in El Cajon Boulevard, a storefront, it's going to cost you a lot of money. So I'm
Mhm.
scratching my head, right? How many of these pizzas,
So he got to sell, right?
right, does he got to sell to basically pay that mortgage or that rent on El Cajon Boulevard? I'm scratching my head. I'm like, okay, now I wonder how much 401k he got. And guess what? 6 months later, he was
Well,
gone.
it's gone. Yeah.
Think
But
about that.
but you had asked something earlier, Tyrus, right? You said people bootstrap their own program. If you do a 401k, that's basically bootstrapping, right? You're paying
Yeah.
from it from your own funds, right? Your money is always limited. I don't care if you have $10 million, 10 million, billion. It's going to run out if you put it into ideas, knowing the statistics is against you, right? What is it? What 80, 90% of companies within the first 2 years or whatever going out of business?
Yeah.
So you're already putting your money into a losing proposition. So why use your money when you can use investors' money? Investors will invest in your project, knowing that risk. They
Right.
will invest in your product.
Right. And most of the time, what people understand, if they don't invest in your product, they're going to invest in something.
They're going to invest in
And
somebody.
you
Yep.
need to put something good together. They're going to invest because they're going to invest it. That's what they do. And you got to realize that if you got something, we always talk about, does your business have sizzle? And if you got sizzle, when you come in a restaurant, they walk by you with that steak and that thing, everybody's turning their head looking. That's what your business has to have. And I'll give you another story real quick. This one guy, I think I took you to the store showing this guy was brilliant. He had a store and he basically, it was called, I can't remember what it was, but he had all the canned goods. He had all of like
Well, I know you're talking about, yeah.
what is it, like the
The
bread?
Walmart.
Right. And so basically,
Yeah.
the canned goods that he had, he would get canned goods that had a ding in them. There was a scratch on the label or something
Mhm.
like that. So he would get that and he would fill his shop up and then he would have all of that in there. But what he did was he had a relationship over in China. And his relationship over in China is that he would go over there to China and he would buy. So he had refrigerators in the store, he had televisions, he had washers and dryers. And if you're not familiar, they send a canister over basically from China and it comes here in the shipping yards, whatever. But what happened is he said, Kyle, I'm sitting down right next to the Walmart buyer. I said, what? He said, yeah, my TV says basically like Hasaya or whatever. And then the Walmart TV said Acer. But he said, I'm sitting right there. It's the same TV that you're going to get at Walmart. He said, the only difference is this. He said, basically, that they're going to change the name and they're just going to charge us a little bit more. I was like, oh my goodness. And so that was his store. But guess how he got started? He took a second on his house.
Wow. Yep.
So
Yep.
he had an incredible. So think about if he could pitch a PPM and say, look, you're buying from the same people that buy right next to Walmart. This is what I do. And guess what? I bought a TV from him. That TV still works today. But guess what? His business is gone. It's
Wow.
gone.
It is so true what you said earlier about investors are going to invest regardless because I have just been researching basically crowdfunding platforms and other platforms that allow you to buy shares online because I didn't even know they existed. But now that I see that exists, there are thousands of investors, probably more than not thousands is an understatement, that are
Millions.
looking, yeah, millions of investors that are looking to put their money somewhere. And why not in your business? Why not in your idea? because they are putting it in real estate. They're putting it in the stock market. They may be putting it in their own other ventures that they're thinking about. They're finding other places to donate it. Like they are looking for places to put their money to diversify their portfolio and to get a return. And so I want to get us out of here because I don't want to spend long. I want to keep it short, about 30, 40 minutes a night each night. But I want you guys to hang on and stay with us because what we're going to do and the information we're going to give about raising capital, taking your company public, growing and scaling your business, really taking you from, and we're not, if you're here and you're following us, you got to think 100 million plus. If you're trying to make 6 and 7 figures, just go ahead and stay somewhere else listening to that. Because I was listening to, I don't know who it was, but they said when you say that I'm just trying to make $1 million, that's where you limit your mind to. And that's the resources you see to get you to 1 million. You have to be saying, I want to be worth 250 million. I want to be worth $1 billion because it's possible. And we see it happen all the time. We just don't think it's possible for us. And I don't know why, because it actually is real. And now they're saying you got to have 3 billion to be a billionaire. Like $1 billion ain't even enough. To be a true billionaire, you got to have $3 billion. And it's so possible. And I'm watching people do it every day. And it's always been around. Now that I have my eyes open to this world even more than I did before, I'm seeing that, oh, when I was in government contracting doing that work, you have the big prime companies getting bought or buying other smaller companies or private equity groups coming in and buying other companies and contracts and put them together and sell them. It's always been around and people have always been doing it. And now with the Jobs Act that happened in 2012, we 12 years later.
Yeah.
It's even more possible for us. And I want to talk really quick about the way you can think about the groups. Sean alluded to it earlier. There are your Main Street businesses. Those businesses are anywhere from $0 to about 50 million. Then you have those middle market players. Those are 50 million up to $1 billion. Then when you get into the $1 billion, you're talking about companies that can go public or are public. They're your Wall Street companies. And so you got to figure out where in that place you are and how you get to the next level and move up and what conversations you're having, because there's a different conversation at each level. So while Sean was saying what he meant when he was talking about, you can't just walk into a Goldman Sachs talking about going public because they want you to be doing $50 million. They need you to be in that middle market space so they can take you to Wall Street. They're not interested in trying to take a Main Street business to Wall Street. It's just not enough revenue for them. And even the not venture capital start out, they can help you from the beginning. Even middle market private equity groups that invest in companies won't look at a Main Street business. That's why we're looking at Main Street businesses to buy them so we can sell them the middle market. And another thing I want you guys to do is follow us on our journey, because not only are we going to come and share information on how you can do it, we're in the streets doing it too. You're going to watch us take the same exact information that we're sharing with you and build our company, take it public, have our own stock. You're going to see us on the stock ticker. You'll be able to buy Legacy Wealth Capital Group shares, and you will see exactly what we're talking about. And I want you to hold us accountable over the next 3-5 years. Stay with us, watch us. If we don't do it sooner, because we on a roller coaster. We trying to get that fast bullet train style. So I'll let you guys, if you have anything else you want to close out with for this first one, go forward.
Yeah, but I would like you guys to know that, we also do a course. So one of the things that people were asking us, man, you guys took your company public and how you did that. We're like, look, hey, we'll teach you how to do what we did. But basically, you got to understand it's work. It's not easy. It's not no get rich quick, or this ain't no MLM or anything like that. No network marketing. It's real live. Build your business. Check us out on www.capitalraisinacademy.com. Once again, that's www.capitalraisinacademy.com. And every Wednesday from 8 to 10 Eastern Standard Time, we go over and we teach you. We talk about some of the different instruments to use and just getting your mind right to be able to take your company public or at least raise capital.
Yeah. I just want to say, lastly, what is the difference between the Elon Musk, the Bezos, the all of the people that took their company public? What's the difference between them and you? Access. They have access to something that you've probably never heard of, or or something that you might have heard of, but you don't have, right? Cal and I, Tyrus, we are the access. So we're opening up we're giving you that access through us to take your company from basically zero to an IPO. So the thing about it is, again, like Cal said, it's not a get rich quick scheme, but you can do it too. If you need to raise 10 million, 100 million, $1 billion, you can do that. It's possible. And we understand how to do it. We have the tools to do it. Again, our classes are on Wednesday nights at 8:00, and we teach about how to raise capital for your own business, if that's needed. Or you can give us a call. Go to our website, go to the calendar, and schedule a call with us, and then we can help. We can kind of walk you through it. So we could do it either way. But that's pretty much what I have to say. And I'd like to thank you guys for attending the call today. And again, if you guys have any questions, whatever, feel free to reach out to us.
Very good. Very good. All right, good people. We're not going to be here next Thursday, Thanksgiving, but we will be here every Thursday after that at 7 p.m. Eastern. Thank you for joining us, and we will see you next time.
Thank you.
Thank you, guys.
Have a good one.